Hi everyone. Well look, first and foremost, Happy New Year to everyone. Hope everyone has a great 2022. It's that time again of the month where we do the UK House Price Index, which is published by Zoopla. Now this is obviously the remnants of last year, so this is everything up until November, or the end of November 2021. It was published, as you can see at the top, December the 20th, 2021. But it's, as I say, it's pretty much the end of last year. There will be one more report that comes out which takes us up till the end of December, but I don't really see too much change happening up until the end of the year. So this is probably going to be the last one we do for up until 2021. So what I would say as well is, guys, that we really appreciate everyone watching these videos, but if you can also subscribe, which is at the bottom right hand of your screen or the bottom right hand of the video, if you can subscribe, that'd be fantastic, and it really helps us get the numbers up, so thanks a lot. Well look, without further ado, let's get involved. So first of all, what's the house price is doing? We can see here that they went up 7.1% year on year. Again, demand for homes is still extremely high, and the supply of homes is really curtailed, is really tight. Now that's not going to change. I can't see that changing too dramatically. The second two boxes, that is. I still think demand for homes is going to be extremely high. I still think the flow of new homes is going to be tight for the first 6 months of this year, 2022. What I do see changing is this figure here, so this 7.1%. Now I see this being brought down slightly. I see it coming down to around about sort of 6.5, maybe even down to 6 as we get in towards December and January 2022. But then I see it ticking up slightly, because what you tend to find is at Christmas time, the busiest days for Rightmove and Zoopla on the portals are actually Boxing Day. Now there's a number of factors that affect this. First of all, it's to do with people have new devices, so they have new smartphones, they have new iPads and new computers. So the first thing they do is go on websites they know, whether it be BBC or Sky Sports or the news websites, and of course then they start looking at properties because they start thinking about their own property. The fact is, because people have a lot of time off over Christmas, because people have been in their properties, they start to notice faults, whether that be faults with the actual property or faults due to space or lack of space. And what people typically do as well is they find that there is a lack of space because they have family or guests and friends from outside coming into their property, and they realise actually there's not that much room. That's the first thing. And also what happens is people go around other people's properties, they see things that they like, and they start looking on Rightmove and Zoopla thinking, actually if I can go and buy a property like that. So what you tend to have is a lot of people looking on Rightmove and Zoopla at that particular time. So what I am going to say is that although I see that the house price growth will tick down slightly, I actually see it come sort of February and March ticking up again, especially as we come towards the springtime, because I genuinely don't see that the demand is going to decrease, and I don't see that the flow of supply is going to decrease, especially for the first 6 months. But as you can see here, I say overall to end the year we had a really strong buyer demand. The house prices increased by another 16,000 over the last 12 months. There's an average rise of 7.1% for the average house price. As I say, it did come slightly back August to August, from August 2020 to August 2021 it's 7.6, and we're now saying November to November it's 7.1%. And as I say, I see that's pulling down slightly before we have a bit of an increase. Prices have really increased homeowners' equity, and what we're now seeing is, because they've increased equity in people's properties, we're now starting to see people take equity out of their properties and invest it into buy-to-let. So whereas these particular clients and individuals may have had a certain amount of equity, if their equity is being boosted by 15 and some 25,000 plus, they've actually now got a deposit for a buy-to-let property. So we're now seeing the buy-to-let market have another influx and another buck, because what we're seeing is people have got more money in their pockets. And again, what typically happens, as you can see here, buyer demand eases in line with seasonal trends up into Christmas, but it builds sharply again after Christmas, which we're already seeing. We've been back 2 days now, and we're already seeing a huge number of inquiries come through, more than we can actually cope with. But again, let's sort of move down here and we can start talking about what happened last year. So the average prices rose 1% in November. The total annual growth 7.1%, as we said, down from 7.6. But look at the average home price now. The average home is sort of 240,800. Now, the majority of buy-to-let, the average buy-to-let home, I would say, goes less than that. You're probably talking around about 150 to 170, some more, some less, depending on areas. But the average buy-to-let will be less than that. That's why if people have got in the region of 25 or 30,000 pounds equity in their property, they can take it out. They can comfortably get that buy-to-let property with a buy-to-let mortgage. And again, what you can see here is in terms of the areas that went up, you can see in this paragraph here, you've got homes in Liverpool have registered the highest rate of growth. The league table, or so it's called, is pretty much the same month on month. It's always Liverpool and Manchester at the top, and then the third place changes, whether it be Belfast or whether it be Nottingham or Birmingham. But as I say, at the moment it's Nottingham coming in at 8.1%. So that's the top three: Liverpool, followed by Manchester, and then followed by Nottingham. We still think that there are pockets of London which are great to invest in, but as a whole, London is a tough market because it's so expensive. It doesn't make a great buy-to-let, if I'm honest, in certain areas. And the reality is that the prices can only go up so much. The affordability is only so much. It can only stretch to a certain budget. So what I would say is, for those of you that are looking to buy in London for buy-to-lets, you've got to be really picky. What I would say is typically anywhere 30 minutes from London, you're going to be winning. The reality is you get somewhere 30 minutes from London, whether that be the Ashford area, whether that be Redhill, whether that be Hounslow. The reality is that you're going to get a great property within 30 minutes of central London. You're going to get a great buy-to-let, and of course you get more bang for your buck a little bit further out you go. And of course, like we see most months, only 1 month last year where Aberdeen didn't fall, but typically Aberdeen is having a mass exodus and people are selling their properties there in droves. So then as we move down, what you can see is 15.7 million homes, registered values, or rises I should say, of 15,000 plus. Some homes have done a lot more than that, but that's a lot of money to put in people's pockets. The reality is people have confidence. When they've got confidence, they start to borrow more or release equity, and that's, as I say, is what's fueling the buy-to-let market as well. And you can see here what's been going on. So you've got a number of homes here change their value of between 15 to 30,000. But you have, and this is where we have a lot of buy-to-let individuals come through. We had a set percentage here, so the number of properties. So you've got 3.5 million properties. The property actually went up between 30 to 45,000, and actually 3.1 million actually had properties going up 45,000 or more. So if you've got 45,000 or more extra equity in 1 year, as I say, people have that confidence and they then go and buy second, third, fourth homes and so on. So what we are actually seeing is the buy-to-let market is really pushing on because of that. And another factor is this post-Christmas bounce. We always see it year in, year out, the post-Christmas bounce because of what has happened over the Christmas period. And as I said before, in terms of space in people's houses, or lack of, I should say, and of course things like where you go and you have that, you have that envy of other people's properties. So you start looking on Rightmove and Zoopla to see where you can get a similar kind of property. So we have a bounce back, and then what keeps riding, and we're on the crest of a wave, is spring kicks in, and people are actually more comfortable with going out searching for properties. And I think now the virus has been a little bit milder than what we thought it was going to be before Christmas. People have a lot more confidence in getting out of their properties, getting their properties on the market, their properties being valued, and having people come around and view their properties. So I think that's a big factor that we're going to see run right the way through till March, April. But the key is, as I say, as we start to push down and we start to look at this chart here, you can see Liverpool, Manchester, Nottingham and Sheffield all ticking up over 8%. And of course Liverpool driving that over 10%. And then you can see here it's still Leicester, Bournemouth, Belfast, Portsmouth, Leeds and Cardiff make up that top 10. They're all making, all over 7% in the top 10. So, and we still think that top 10 isn't going to change too much. There might be, fourth place swaps with fifth or something like that. But the reality is those top 10 will be pretty standard right the way through next year as well. We still think that those cities, because they're cheaper, they're the ones that are still going to progress. They're the ones that have still got room for growth. And the outlook, as I say, we feel that the outlook's strong. The fact is, the Bank of England, as you can see here, it did make its first way into raising rates. But as I say, it only raised them from 0.1 to 0.25%. When we look back at previous crashes and we look at things like 2007, 2008 crash where the bank rate was at 5%, or we go back to late 80s and early 90s where the bank rate was over 15, 16%, that's a totally different ballgame. Whilst I think that the bank rate will have an effect, and the increase in the base rate will have an effect, the reality is banks are doing far more stress tests now than they were 10 years ago or 30 years ago. So I think people are going to be a lot more comfortable knowing that they can afford the extra money that's going to go on their mortgage. And typically people have signed at least a 2-year mortgage, some 5 years, some 10, but the majority of mortgages are either 2 to 5 years. So this actually, this increase in rate actually won't kick in for another couple of years at least to the majority of people. Some people, they see their rate won't even kick in for 5 years. So my advice to people is, look, it's still a great time to get a mortgage. For those of you that are on the fence thinking, you know what, I need to invest in something, I don't know what to do, the reality is take advantage of the mortgage rates. They're still low, because if you sign up for a 5-year rate now and you've got that rate fixed, the reality is even if the bank rates or the base rates start to increase, you've got your mortgage fixed. You know exactly what you're paying for the next 5 years. We see that there's going to be another rate rise. Well, what we've got here is we've got Zoopla saying that there's going to be another rate rise. We think there's going to be another couple. We think probably there's going to be one in Feb and one towards the summer as well. So we know that mortgages are going to increase in price. So we are saying to people, look, if you can lock your rate in now, it's a great time. And the reality is the most people resist buying a property or buying any investment because they think two things: either they're going to lose money or there's going to be better opportunities down the line. Well, the fact is, there might be better opportunities in terms of you get more interest or more income, I should say. But if you're paying more interest in terms of your mortgage, that might wipe it out. And in terms of, are you going to lose money on property? Well, if there's a crash, the reality is on paper you've lost in the short term. But we always say if you hold property for the medium to long term, there are very few people that have lost money in property over the medium to longer term, as long as you hold it, because you're still getting that consistent income. So as I say, we do expect the market conditions to change slightly this year. Zoopla has got here, they're going to start to normalise, but the reality is I still think we're going to see well over that 4.5% to 5% growth, because I think supply is restricted and I think demand's going to remain pretty high for the foreseeable. So I think we've got another great year in 2022, and I hope you guys are going to be a part of it, and I look forward to speaking to you soon. Take care.